All in all, a great quarter for us, reflecting our consistent performance both on the revenue side and the margin side. Revenues grew by 3.5% Q1Q, 14.1% Y-on-Y. Net margins for the 8th straight quarter improved up 6.6% sequentially and 42.8% on a yearly basis. In terms of the growth, I think it's been largely reflects our strategy around both the momentum and emerging momentum markets that we participate in. So in the momentum, significant growth of financial services and the manufacturing segment. The emerging momentum markets, which are life sciences, healthcare, and public services, continue to drive growth there. From a deal win perspective, we booked over $1 billion this year, 9 transformational deals, a significant mix of integrated deals between applications and infrastructure driving the growth in there, and I'll touch upon that in a bit. If you really look at financial services, grew by about 7.2% Q1Q. IMS, of course, continued to lead significant growth, given the fact that there is still a significant under-penetrated market by about 8.8% sequentially. At the same time, services in application, engineering, and BPO showed a healthy growth. If you look at from a customer satisfaction perspective, again, another great quarter from customer satisfaction perspective. We continue to drive our growth through service excellence, delivery and service excellence, which is an important element in transformational engagements, especially the rebid market when you look at moving out from incumbents to an incumbent to a new service provider. With that, I'll actually give it to Anil to walk you through greater details of our financials.
Thank you, Anand. So this has been a great quarter. We clocked 7,961 crore in revenues, which is 14% quarter-on-quarter and 31% Y-on-Y. If you look at the net income has been higher than 1,400 crores, which is 19% Q&Q and 64% Y-on-Y. So our EBIT margins expanded by 300 basis points from 20.8% to 23.8%. And our net income margins expanded by 60 basis points, which is 17.2% to 17.8%. The currency did play a good part in sort of helping us expand our margins this quarter particularly, and that impact out of 300 basis points was 250 basis points. The SG&A rationalization also helped us, but it's a very small one, 10 basis points. And then the other efficiencies in the business, the steps we are taking, helped us in improving the margins by another 90 basis points. The wage hike took away 50 basis points, so net we gained 50 basis points. So one of the key things we are focused on is SG&A investment, and we are sort of rationalizing on G&A and investing in sales and marketing. So this year we will be consolidating like 16, 17 facilities. And if you see the facilities list in our investor release, you'll find that 31,000 seats are getting created majorly over 3 campuses and also outside of India. So we are investing in the campuses. The consolidation is helping us sort of cut down the operating costs, vendor consolidation there, and all those sort of things, the benefits you can realize through consolidating the facilities. Our conversion of free cash flows as a percentage of EBITDA has been excellent, continues to be very good. For the last 12 months, it has been at 75%. Our return on equity has stayed at 34%, which is also one of the best in the industry. And our EPS is up 63% Y-on-Y, which is 81 rupees and 20 paisa. So as Anant explained that the momentum verticals as well as the emerging momentum verticals led the growth this time, and where we derived some 70% of the revenues, they grew between around 6 and 7%, which was very good. The margin expansion has happened at all levels: gross margin, EBIT margin, net income margin. Since we cover ourselves for a foreseeable future, we have a layered hedge policy, as per which we take covers of up to 40% of our inflows likely to come in next 1 year, and we were hedged. There was a hedge loss which arose this quarter, and which has been taken into and factored in already. We had higher other income because of the treasury sizes increased significantly. Our hedge position is close to 1.6 billion, and which includes both the cash flow hedges of 1.25 billion and 350 million of balance sheet hedges. So we continue to follow a layered hedging policy in this volatile environment.